In the complex world of government finance, the federal budget stands as more than just numbers on paper. It symbolizes the nation's economic priorities and the underlying policy agenda of its leaders. For fiscal year 2025, the Trump administration crafted a budget plan situated amidst ongoing fiscal challenges. This intricate document not only outlines revenue and expenditure, but also communicates the administration's policy stance, revealing fiscal implications that could impact the nation significantly. Understanding the U.S. federal budget process offers clarity on how decisions within the governmental framework unfold. Governed by the Congressional Budget and Impoundment Control Act of 1974, the procedure involves both the legislative and executive branches. The Office of Management and Budget, an executive branch entity, prepares the president's budget request, setting the initial groundwork for financial planning. This document then moves to Congress, which holds the power to pass appropriations bills, dictating the exact terms for financial resources distribution across federal departments and programs. Fiscal year 2025 forecasts federal revenues at approximately $5.2 trillion, shaped distinctly by key revenue sources and policy changes. Individual income taxes remain the largest revenue sector, influenced heavily by the permanent extension of the 2017 Tax Cuts and Jobs Act. While this extension promises economic relief to many, it also poses a significant reduction in federal tax revenues over the coming decade. Corporate income taxes follow, affected by continued tax breaks and reduced rates, which prioritize stimulating business growth. Other revenues emerge from payroll taxes funding social insurance programs, excise taxes on consumer goods, and tariffs increased under protectionist trade policies, each contributing uniquely to the financial pool. On the expenditure front, federal outlays for FY 2025 reach approximately $7.0 trillion, delineated across various sectors reflecting administration priorities. Mandatory spending occupies the largest budget share, addressing obligations such as Social Security, Medicare, and Medicaid. These programs support retirees, low-income families, and vulnerable populations with necessary financial and healthcare aid, representing essential components of the social safety net. Discretionary spending accounts for defense and non-defense areas, outlining appropriations for education, public health, veterans benefits, and infrastructure, elements critical for sustaining public welfare and economic expansion. Furthermore, net interest payments on the national debt, driven by growing debt levels and interest rates, constitute a notable expense poised to increase in the future. Transitioning from FY 2024 to FY 2025 marks a definitive shift characterized by strategic realignments and budgetary priorities. Notably, tax policies continue to tip in favor of reductions, while defense spending experiences noteworthy increases, reflecting a concentration on national security. In parallel, reductions manifest across various social programs and federal initiatives perceived as misaligned with administrative objectives. This adjustment embodies the administration's emphasis on border security, military strength, and economic protectionism, even at the cost of other domestic and international initiatives. These fiscal decisions portend both intentional and unintended consequences. Chief among them is the anticipated rise in federal deficits and national debt, with projections indicating mounting fiscal instability. The extension of favorable tax provisions particularly benefits high-income earners, further widening economic disparities. Moreover, anticipated cuts to Medicaid and SNAP raise concerns about access to essential health care and food security, disproportionately impacting low-income Americans. This scenario unfolds potential challenges for these communities, underscoring the stringent balance policymakers must navigate between fiscal responsibility and social equity. Under the Trump administration, the FY 2025 budget epitomizes the America First agenda, characterized by a unified blend of tax cuts, military enhancements, and regulatory shifts. The ongoing focus on border security and firm stances on trade, evidenced by increased tariffs, reveal efforts to realign economic and policy priorities. Simultaneously, the overarching approach of reducing government intervention in social welfare through diminished funding for arts, public broadcasting, and other cultural sectors echoes the administration's stance on federal expenditure. In summarizing the FY 2025 budget, we witness a financial blueprint uniquely navigating entrenched fiscal issues with a bold policy roadmap. The strategic emphasis on defense, economic growth through tax cuts, and border security resonates strongly with the administration's goals. Yet this approach, fraught with potential repercussions, invites critical discussions surrounding its broader implications for the nation's fiscal health and public welfare. As we unravel the complexities of policy decisions and fiscal strategies, their influence on the national landscape becomes apparent. Whether these decisions will foster long-term stability and economic prosperity or reveal unforeseen liabilities remains a pivotal question in shaping the nation's future path. As stakeholders engage with these outcomes, the broader narrative of policy choices and fiscal strategies continues to evolve, illuminating the intricate interplay between governance, policy, and people.